Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Lululemon is in the headlines because they did well on their earnings in Q4, which is interesting because, you know, we've been talking about people slowing down on spending. Holiday spending wasn't all that exciting, yet and still this company is doing well. In fact, they've done incredibly well. So in this video, we need to talk about what's going on with Lululemon. Can this tell us anything about the larger economy and the stock market? And also, what lessons can we learn? I think that's probably the most important thing that we need to pay attention to here. All right. Lululemon, for those that don't know, they're an athleisure company. They make what I am told are comfortable pants and workout clothes. I have not had them. I have not seen a Lululemon store. Sorry, I've not been inside a Lululemon store in my life yet. Maybe I'm not fancy enough or I don't exercise enough. I don't know. Either way. But the stock has been good. My daughter owns it. It's one of the first stocks that she has owned. She's the one that does the intros to this video. She's up right around 12%, which ironically today, the stock in just a single day is up about 12% or so. But what is going on with the company and why is it rising today? Number one, they did announce earnings last night after the stock market closed. But here's the thing. They grew. And one, they beat estimates. So you got analysts that come out here and say, hey, we think they're going to do this. They did better than that. But most importantly, they grew on what we call the top line and the bottom line. That means that their revenue, that's the top line that you see, how much money did you make? And then the bottom line, net income, profits, what you got left over. And they beat on both of those and they did quite well. In fact, I'm going to show you here on the screen just some of their financial metrics. This is pulled from public. So you can see here, Q4 of 2022, their revenue is up year over year. So Q4 22 to Q4 21, up 28% on revenue. If I skip down to net income, they're up 36% there. Operating income is how much money they make from buying and selling their goods. And then the acronym is called EBITDA. That's earnings before interest, taxes, depreciation, and amortization. If y'all want to know exactly what all that means, we can get into it. Basically, how much money did you make before you started doing all the accounting stuff? Depreciation of assets. Your building is not worth what it was 5 years ago, so that is counted as an expense, but it's not actually an expense. Basically what that is. But again, you want a full video breakdown that, let me know in the comments, and we can do that. All right? So anyway, that's great. If you can, you know, become a lot more profitable, 36% more profitable year over year, that's obviously a great number. But they expect even more. So this is the thing that stood out to me as well. They are expecting double-digit growth in sales this year. Now, last time I checked, and we talk about this often, you got people including the Fed and bankers and all these experts and professors and economists saying that, yeah, we're slowing down, we're likely going into a recession. Yet this company is still predicting double-digit growth. They're expecting to double their business by the year 2026, which last time I checked is about 3 years from now, which would be great if they could. And if that is going to be the case, that would mean that, I don't know, right about now would be the time to consider buying the stock and adding it to your portfolio. Now the question is that going to be accurate? There are companies that put out estimates all the time. I'm sure if I've asked Meta what they were going to do back in 2021, they would have told me something completely different than what they're doing now in terms of AI and the metaverse, because it was not a thing back then. 3 years is a relatively long time when it comes to the stock market. I will say though that the business, from a business perspective, what you bring in, what you sell, how profitable are you, they are quite healthy in that space. My question would be, what are you paying for it? Like, I would prefer not to chase the stock. It's up double digits today. This is not the day I would want to buy it because I might be able to get it for cheaper down the line. Might be. There's no guarantee there, but I might be able to get it a bit cheaper. There are some analysts that feel that it is overpriced, meaning that compared to other companies that are out there and what they are producing, that it might, you know, the price just isn't right. I lean towards that side, though I am not someone who firmly believes that you can seriously nail down the right price for something. So right now, I think shares are above $300. Just want to double check that real quick. Let's see. So right now, at the time I'm doing this video, shares are $360.64. So I can't sit here and say that 300 is the perfect price, or 395 or 355 or what have you is going to be the perfect price. But I would not immediately go buy the company now. What I would do is, number one, estimate and research how this field is supposed to continue to grow and how would this field do, or how has it done in the past in recessions. And I would take out the pandemic. I would absolutely take out the pandemic, because that is the thing that I want you to avoid. The problem here is if I start to go do my research and I see that clothing, athleisure, apparel, sporting goods, and all that stuff does okay during the pandemic, or okay during a regular recession, but I look back at 2020, that's going to be an issue, because that was a particular recession that we were trapped at home, and people were specifically buying a whole lot more goods, working out, figuring out what they were going to do at home, which is why they even bought Mirror to begin with. That is an anomaly. Hopefully it never happens again. But I want to go back and see what was going on in 2008. How were companies like this doing? Emphasize companies like this because you go back far enough, you know, this company's relatively new and they were always publicly traded. So you want to be careful of that. But how do clothing companies do? How do athleisure companies do? How do sporting goods companies do during those rough times? Just so you can be ready and have some level of expectation for what could be happening right now or in the near term future. So calculate that, pull that into your research and see whether or not you want to add it to your portfolio. I think the good thing, if you do, is that it is, I don't want to say immune. It is obviously interest rate resistant and inflation resistant. We have seen that, right? The stock is up. Obviously, during that time, they had more sales and revenue and profits during that time as well. I want to double check this as well. So even over the last 6 months, it's been up 16%. That's solid. If I look over the last year, they're up about 8.8%. Not the best number in the world, but that's incredibly solid given where we were in 2022. So it is resistant to inflation. It is resistant to interest rates. So it might be something to add. And what I like about it the most is just where it's positioned. You know, people are very focused on tech. We talked a little bit about tech yesterday. You know, people are always going to be focused on healthcare in some way, shape, or form. And then you got people who are investing in energy. Very rarely do you have a whole bunch of people in this, I want to call it a niche category, but in that clothing, manufacturing, yeah, maybe can lean into the beauty fashion market if you choose. But these tend to move in different cycles. So it is something to pay attention to. What am I doing? I'm just going back and mind my business. My daughter already has it. I will probably dollar cost average here pretty soon. For the kids, I do like, you know, monthly or so because they don't have much money. You know, I'm not going to invest $5 every week for them. I just got to wait and kind of do it monthly or quarterly for them. So she's going to buy some more. The kids are going to get some more. But let me know what you think about the company. Is it something that was on your radar? Do you like it? Have you tried their products? I am curious. Like, do I need to go out here and get some Lululemon pants or whatever else they sell? I would be interested to know. All right, last thing, we doing this book club thing. All right, I've heard people in the comments, they got their books. It's been there. So we're gonna figure this thing out. Again, I've never done a book club ever in my life, but I do want to start in April. April is Personal Finance Month. So I will take some time this weekend to figure out what pace are we going to read, what questions are we going to ask, and then what format are we going to do this as well. So I will be doing that. That'll be my homework over the weekend. Your homework is go to the library, download the ebook, download the audiobook, whatever method you like to read the most, and get The Intelligent Investor. That's what we're going to do. Is we're going to break it down, and then we'll take it from there. So this will be fun. This will be new. You are a part of something new and different that we are doing on this channel. I've never, again, I don't really do book clubs. I just be reading and go about my business. But I've already actually started the book just to kind of get ahead and, you know, be a good book club person. And there are some very interesting insights, even though the book was written, or at least my revised version was written in the 70s. Very interesting how a lot of those same themes play out today. So I am looking forward to doing it. But again, let me know in the comments when you got it. This is your chance to get it now. 2-day shipping, Barnes & Noble, wherever it is you want to get it. Library for free. Go on and get it now so we can read it together and break everything down. All right, that is it for me. As always, you want to make sure you join the members only. Our top 10 tech stocks that is dropping. So you want to make sure that you're in the members only to get that as well. All right, that is it for me. I'll talk to you guys later.